Welcome back to another video. Today, we are going to be going over how to analyze cryptocurrencies for potential investment. In today's video, we'll be going over different aspects that you should probably look into uh, related to a certain project or token before you put any money into it. And this also helps you legitimize your rationale, right? Like you never want to put your hard earned money into something that you know nothing about. You want to make sure you know enough about whatever it is that you're about to invest in to be able to sleep at night. A lot of early investors, a lot of new investors, they put their money into it and they're checking their portfolios every second of the day. You definitely don't want to be that person. You want to be able to put your money into an asset and literally forget about it. Don't miss that money, right? And being able to be confident in your research will allow you to kind of just coast it out, ride it out. And by going through these steps or looking at these aspects of projects, it allows you to do that. Be at peace with your investment. That's 101. You want to be at peace with your investment, and you never want to move in and out of any investment unless something absolutely fundamental changes with that particular project token. Even in the world of stocks and commodities, you want to be able to feel confident in your research. So doing walking through these steps will definitely give you that confidence. So let's get into it. So, this is today's agenda. We have 9 things to go through. Like I said, we're going to be thorough in the aspects or the things that we look for when it comes to our research. So, if you hit items, these 9 items, you'll definitely feel more confident, or at least you should feel more confident in investing in a particular asset. And if you don't, even after going through this, then that means you probably should not be invested in that project or that token. It's that simple. So it's definitely not rocket science, but let's get into it. So, starting off with market cap. Now, market cap is a very common baseline metric that every investor should look into, whether it's stocks or crypto, whatever you're invested in, you should be able to look at that asset's market cap. And it allows you to gauge the total value of an asset. So, all market cap is, especially in the world of crypto, is circulating supply times the current price of that asset. And that will give you the market cap. Now, there's also such thing as fully diluted market cap. And what that simply is the maximum supply. So, like in the world of crypto, you can mint tokens. Most tokens have a maximum amount of tokens that can or will ever be minted. That is the one of the core values or core pillars of digital assets, is that there's a finite supply. It helps with the demand curve. It helps with the rarity of it, which also helps drive value. If there's a lot of tokens in circulation, then that could also help you determine about how long you could expect for that asset to start appreciating. It might be low in price for a while. So that kind of helps you gauge how long you will be in an asset, or whether or not you should allocate a large sum of your capital to this asset. So fully diluted market cap is just the max supply times the current price. So you're just swapping that supply aspect of the equation out to get either market cap or fully diluted market cap. So trading volume will help you determine how liquid an asset is and whether or not that asset will have or be able to maintain price stability. So in the world of crypto, extremely volatile. I mean, depending on bull market, bear market, the volatility can fluctuate extremely to one extreme or the next. So you got to be careful with volatility. But trading volume will help you determine how exactly volatile that particular asset is. If you see, uh, low 24-hour trading volume, then the volatility will definitely be there. Any minor buy or minor sell could swing the price in large sums in one direction or the other. you may not want to be involved in an asset that is not exchanging hands at a frequent pace and a stable pace. So the more trading volume you have, the more stability that price will be. The less trading volume you have, the less stable that price will be. So something to keep in mind for sure. So supply. Supply helps gauge asset scarcity and potential price appreciation, like I said earlier. So in terms of this, you have things like I said, total supply, you have max supply, you have circulating supply. So max supply again is the total maximum that the asset can have in circulation ever. Infinite supply can create inflationary pressures, but that's not always a bad thing. In certain tokens or projects that have inflationary pressures, you want to look at their burn ratio or if they even have a burn mechanism. And you also want to look at the inflation schedule. If a token has high inflation at the onset of that project or that particular chain, then it might be a good thing that as the years pass, as the chain ages, the inflation schedule lessens over time. So you don't want high inflation for a long period of time because obviously that dilutes the value of the asset, but you definitely want a healthy inflation schedule if that asset is inflationary by nature. If not, then you don't really have to worry about that aspect. But if so, this is definitely a good tip to keep in mind. All right, so moving on to current price. Current price can help gauge the current market performance of that asset. So you definitely want to look at how this asset is, performing compared to other assets in the market. Has it taken off? Has it not taken off? How far from the all time high is it? Is it at its all time high? Things of that nature. You definitely want to keep in mind. You know, as far as timing your entry on certain assets, percent from all time high is key. Especially in crypto, again, in a bear market, you could see, 50, 20%, 70%, even 90% swings to the downside. So gauging where an asset is in terms of how far away or percentage wise it's away from its all-time high will definitely help you gauge when you could possibly enter an asset, whether you want to be in an accumulation phase or you want to be taking profits. It all depends. All-time high can also help gauge potential growth depending on current price. So this goes back to how far away it is from the all-time high, or if it's already at its all-time high. What percent did it shoot up to get to its all-time high? That might help you gauge how much growth potential it has in future cycles. So definitely something you want to keep in mind when analyzing crypto assets. All right, exchange flows. This is probably one that a lot of people don't pay attention to, but as I've kind of gotten mature in my investment strategies, my investment journey, this is definitely something I've looked at more and more and more to determine where we are in the market cycle. And market cycles definitely matter. So when it comes to exchange flows help measure the movement of tokens and by how much. So when it comes to exchange inflow, that determines the amount of tokens entering exchanges. And usually, when there's a high exchange inflow, that means that there's a high chance of extreme sell pressure coming for that particular asset. Exchange outflow determines the amount of tokens leaving exchanges. And that usually is a key indicator of hodling behavior or people holding that asset for the long term. Either, for the long term or for DeFi usage to earn a yield, generate a yield, whatever. But like I said, usually high exchange outflows equal long-term investment or usage for other means. So the next one, fear and greed. The fear and greed index, again, is one of those indicators that allows you to see where you are or where we are in the market cycle. So anything ranging from 0 to 100, 0 being extreme fear. And, this might sound crazy, but you want to be positioned to where you can deploy capital for good assets, solid assets, blue chip assets when you're in that fear to extreme fear zone. You want to buy when there's blood in the street, quote unquote, right? And then a 100 represents extreme greed. And that's normally when you're seeing extreme bullish news. Everybody and their mama is talking about crypto out of nowhere, right? That's usually when you, as the investor, should be positioned to sell, take profits, because that's not necessarily uh, when it comes to crypto a natural thing. When you're at Thanksgiving dinner and your great grandma is asking you about Bitcoin, it's probably a key indicator that you should be preparing to sell, because that's just how crypto market cycles go. Anytime I've been at any gathering during the holidays and crypto's going crazy, my grandparents are asking me about it, friends are asking me about it, my phone is blowing up about crypto related questions. That is my key indicator that a lot of new entrants into the market, and that makes me get prepared for potential sell pressure coming. I don't want to be left holding the bag. As an investor or a trader, you always want to make sure you take profit when you have profit. So again, can help gauge market entry, with the fear and greed index. So moving on to documentation. Documentation is key for crypto projects. It's easy to talk a good talk, but it's more so about delivering in the end. So you definitely want to at least start with looking at the financial models, the SWOT analysis, any legal concerns that particular project could potentially come across or be challenged by. And then you want to see future roadmap. What is that project's plan for the next 2 years, the next year, the next 5 years even? And that will help you gauge how serious this project could be. If the financial models don't seem right, probably shouldn't be investing. If the SWOT analysis seems haphazard, you probably don't want to be investing. If there's a mounting amount of legal concerns, depending on your conviction, depending on the use case and the purpose of this asset, you may not want to be investing. Future roadmap. If they're not really aiming to be unique or novel in any type of way, then what differentiates this asset from any other asset? You want to make sure you are capturing, market share or pieces of these assets that actually are considered blue chip. You want to find the hidden gems, the true hidden gems. Everybody thinks they find hidden gems, but it's very rare that you get a handful of hidden gems. So you want to go through the documentation to be able to help determine a lot of these things. And a good white paper should also assist in clearing any transparency or authenticity concerns. If the white paper doesn't, divulge token sale, token distribution, how much is allocated to the team or the foundation, those types of things, then you probably don't want to be investing, because then that to me signals the team behind the project, once they get enough support, they're going to be looking to dump that supply on its holders, and you again don't want to be left holding the bag. Team and partnerships. You want to look at the team behind a project or an asset, because it definitely matters. You want to research the team members and what their experience may be. What sectors of businesses or industries do they have experience in, and how does that correlate with cryptocurrency or digital asset markets in general? Partnerships also help gauge interest and credibility of an asset or project, with both within and without the crypto space. So if a company is boasting about being partnered with Google or Microsoft or Amazon, and you see those same entities, actually collaborating in the public eye, and they are also bigging up these projects, then that's probably a good sign. But you actually want to look for legitimate partnerships. It's very easy for cryptocurrencies or projects to be able to say, yeah, we're partnered with so and so, and then they actually aren't. It's just a lot of fluff. Finally, token sales. Token sales definitely matter. How a project generates revenue or gets its seed investment definitely matters. So you want to be able to determine if the token itself of that project is the main revenue stream. Because if it is, That's not necessarily a good thing. That means they're not generating enough revenue to keep the lights on without having to sell more tokens, which again can dilute the circulating supply, can definitely bring down the price because they're having more and more assets or tokens in circulation, bring sell pressures. So how long are you going to have to withstand the sell pressure as an investor, as a holder of this token? You definitely want to analyze that. The method in which that project or asset was distributed matters. So did they do an airdrop? Did they do an ICO, which stands for initial coin offering? Did they do an IDO, which stands for initial DEX offering? You definitely want to analyze how did they go about distributing their token. Finally, you have to pay attention to team, the investor, and foundation token unlocks. At the onset of projects, the team typically gets an allocation of the token supply as just payment for bringing the project to life and essentially being the main development spirit behind getting the project launched. Investors, they tend to get a percentage of the token supply as a payback for providing initial seed capital to even pay for the project, whatever the project needed to come to fruition. Foundations of projects are solely there to help build the ecosystem. So in order to do that, a lot of projects or teams, they utilize a percentage of the token supply to pay for marketing or development hackathons or just simply building the ecosystem around the project to ensure the longevity of the project. That's really it. You want to analyze all of this stuff, and not necessarily in any particular order, but it all matters. And I know this is a lot of information, and you're probably wondering, well, what tools do I use to even analyze any of this stuff? Don't worry, that is going to be the very next video following this one. I will divulge the tools that I personally use to help me gauge all of this. So make sure you stay tuned for the next video. I hope you found this information relevant to you. I hope it was informative, and I hope you can utilize this method in order to help better gauge whether or not you think a particular project or token is worth your investment because you worked hard for your money. You want to make sure you're not falling to scams. You want to make sure everything is right before you put your money into that asset or project. So I'll see you in the next one. Have a blessed day.